Well, hello everyone, and welcome to your Daily Five for October 23rd, 2020. Joe Duarte, founder and editor of Joe Duarte in the moneyoptions.com. I'd like to thank you all for spending the next 10 minutes of your valuable time with me and for your continued support. Today, I want to talk to you about my favorite indicator, the New York Stock Exchange Advanced Decline Line, and how to enhance it so that it becomes your go-to #1 indicator for deciphering the market's trend and to make better buy and sell decisions. Little story behind this. After my first video, my favorite indicator, about a month ago, I got a lot of requests for more information, so here it is. You can find that first video on YouTube by searching for Joe Duarte, your Daily Five, or you can look for it on StockCharts.com. So here we go. At the edge of chaos, as always, my favorite indicator, part 2, building the Joe Duarte New York Stock Exchange Advanced Decline Line. So as always, we want to look at our sound trading principles. You don't want to fight the Fed. You don't want to fight the market's momentum and the dominant on the ground trends. The advanced decline line comes in handy very nicely for this second bullet. Stick with strong sectors and stocks, trade in small lots, take those profits when you get those 20% gainers, keep the sell stops no more than 5 to 8%. Monitor those lagging sectors for potential turnaround candidates. Manage your cash wisely, because when your stash builds up, when the market goes down, that's what you're going to use for the next upturn. So let's talk about the advanced decline line. It's a tried and true old-fashioned indicator that is overlooked by many people, but I can't live without it. I can't trade without it either. It's a simple arithmetic formula. You can do it yourself if you want to on paper, but who does that anymore? You simply just take the number of stocks that advance and subtract the number that declined, and you plot it on a chart, and you do it the same way the next day. Pretty soon you have a nice looking line, but who wants to do that when you have StockCharts.com? Here's the key though, the algos can't manipulate it. They can do all kinds of things to make stock prices look great or not so good and fake you out if you can't manipulate the market's breath. It's a great gauge of the market's trend, and it's better than the indices. Moreover, it's a signal of when to enter and exit the market, and I'll tell you all about that in just a second. So, #1 fact, the 80 line is a more accurate indicator of the market's trend than the market indices, because the algos can't manipulate the market's breath. I can't say that enough times. By applying technical indicators to the advanced decline line, you will get better information about the market, and that's what this is all about. Second fact, no major correction in the market has happened since 1987 without a significant divergence in the advanced decline line. I'll show you that in a minute. And we're going to focus on Duarte's 50-50 rule, which will keep you in the market on the right side of the market when uptrends and downtrends. So here's the chart that brought all the questions. How do you do this? How do you make this chart? I'm going to go through it step by step. Remember, I look at the market in terms of complexity, where things are good, market's going up, you're in the complexity zone. This is the advanced decline line. Chaos zone, things are bad, look down here, market's crashing, chaos is unpredictable, makes life impossible. The key to the whole thing is the edge of chaos, which is what I call the 50-day moving average and the 200-day moving average. This is where complexity and chaos are just the right mix to make things happen. What can happen? Well, the market could go up, or the market could go down. And the decision is made at the edge of chaos, which is why you want to be fully in the loop as to how to do this. Other things in this chart that are important, we can certainly look at all the annotations down here. You can see that when the market breaks below that 50-day moving average and the 200-day moving average, at the same time that the RSI indicator down here goes below 50, you have some serious problems. You can see that when that advanced decline line breaks below 50, 50-day moving average, and also breaks below the RSI, it's not a good deal. You can see that here, but you can see the 200-day moving average held things up and the market rallied again. So what we're going to do from this point on is figure out how we can make this chart in your chart book. First thing that usually happens when you get on StockCharts.com, if you don't have the right setup, is you're going to get this picture of a New York Stock Exchange advanced decline line. It's not very useful for analysis. It's a candlestick chart, and all it tells us is here in this point is that there's more advances and declines, but nothing else. We're going to go from this to the next step. Step #1, You want to change your chart attributes. Of course, the chart attributes are below the charts, and they have all kinds of choices for you. The first one you want to do is change your chart attribute to cumulative. And that will give you this nice linear chart of the advanced decline line. So step one, chart attribute to cumulative. Step two, add Bollinger Bands. You don't want to do anything fancy with them. You want to keep them at the 20-day moving average with 2 standard deviations, and you can find that choice in the overlay section right along with the other choices to make your charts look different. Why Bollinger Bands? Well, if you think of the advanced decline line as a market indicator, you want to know when big moves are coming. You can see that when the Bollinger Bands shrink, big moves follow. 20-day moving average is just a nice way of keeping a look at the general trend. But the key to the Bollinger Band analysis with the advanced decline line is looking for band shrinkage. And you can see that every time the bands get squeezed, you get a big move. So 2 steps so far. Step number 3, we want to add that 50 and the 200-day moving average overlays. Remember the first chart, because these are the edges of chaos. 50-day moving average, red line, 200-day moving average, in this case, the green line. These are good overlays. As you can see, your line is starting to look more and more like my line. So Bollinger Bands tell you when a big move is coming. The 50-day moving average keeps you on the right side of the market. In the intermediate term, 200-day moving average keeps you on the right side of the market for the long term. Step number 4. We have our chart up here. Now we're going to start adding more things to it to make it look more complete. We have the ROC indicator, which is in the indicator choices. This is a measure of momentum, and what you want to look for is extremes, such as what we saw here at the start of 2019. A huge change in the ROC indicator, which powered the advanced decline line and the market to a major rally throughout most of the year. This is unique. You want to see this. Here's another one that's pretty good, but it's not quite as good as this one. Nevertheless, it tells you the market's going up. So ROC is a measure of momentum. Really, the most important one of these 2 indicators is the RSI indicator. The reason is that when the New York Stock Exchange advanced decline line breaks below that 50-day moving average as it did here, the same time that it breaks below the 50 RSI level, then you have a likelihood that the market's going to continue to decline. So the same thing back here. Doesn't happen very often, but when you see it, you have to take it seriously. And of course, what I also like to do is have the zoom nail here, zoom thumbnail. And of course, that helps me to see what's going on in this long-term chart in the present. Step number 5, that's the big step where it all comes together. Go ahead and hit the annotate button and add your own legends. Of course, as you can see here, I have added my complexity zone, my edge of chaos. I have circled the big changes in the advanced decline line. I have correlated, of course, the ROC and the RSI indicators down here. You can do this any way you like, but by following these simple steps, you will have an advanced decline line that will look a lot like mine. If that works for you, you can use it the way I do. So here's the final fact. The advanced decline line should be used in concert with market-leading stocks or as a gauge of how well any stock you own is performing. And here's a perfect example of that. Here's a chart of Starbucks. And what we want to see here, of course, is that the first thing is that when the advanced decline line is going up, you want to make sure your stock is following the same general trend line. If it's not, you don't want to be in it. And I just want to go through a few more of my indicators that I think are very useful in picking stocks. Of course, accumulation distribution. You want to see this line in an uptrend, which currently it is. You want to see unbalanced volume in uptrends, of course. You want to see ROC not below that 0 line. And certainly, you want to see it as high up here as you can when the market is taking off. And of course, the RSI, in this case, RSI is very nice because it's just above 50, which tells you the stock is not overbought. Finally, my tiebreaker indicator, volume by price. And this one's Not very popular, but it's a huge, huge positive to have on your side. Look at the size of these bars. The bigger the bar, the more the interest from buyers and sellers. So on the way up, this is a resistance bar, and on the way down, it's a support bar. So anytime the price of your stock hits this general price area, you have to see what it does. And in this case, of course, it broke through, came back, but look, it found support there. And now this stock is looking as if it's trying to find support at the largest bar in the neighborhood, which means, of course, that if it breaks above there, we're going to have a further rally. Incidentally, I do own Starbucks at the time of this recording. So let's recap. The advanced decline line is a more accurate indicator of the market's trend than market indices because the algos can't manipulate the market's breadth. Next, by applying the technical indicators, as I have just shown you, to the advanced decline line, you get much better information about the market. You want to use that AD line to generate those Duarte 50-50 buy and sell signals, and use that AD line to compare how your stocks are doing compared to the market. In conclusion, the advanced decline line is the complete market trend indicator, and I have just shown you how you can make it so that you can use it on a much, much better basis than just looking at the chart on its own. I'm Joe Duarte. Thank you for watching. Please check out my #1 best-selling book, Trading Options for Dummies. Consider a free trial to my website, joeduarteinthemoneyoptions.com. Full disclosure, I recommended Starbucks on joeduarteinthemoneyoptions.com. I own shares in the company at the time of this recording. I look forward to our next visit right here on your Daily 5, and we will definitely talk again.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.